In today's energy markets, let's take a look at WTI crude futures as they continue to realize further selling pressure today. Crude futures trading down about 2% on the day and below the 69 handle now at 68.65, down about 2%. And when you look at it on a weekly basis, this is the largest weekly drop for crude prices in the last year. So heavy selling pressure throughout the week, culminating in further selling pressure today and pushing crude futures down to a 3-week low. And driving factors today, a couple things. Number one, demand. Focuses on China. The stimulus measures maybe not going to have the impact that the market had priced in. So we're seeing, again, demand being called into question. Couple that with global supplies continuing to maintain, and also the concerns about production and transportation are moving out of the market, at least for the time being, and those factors I think are certainly having an impact as far as the pricing structure. Now, we did see a draw this week in the reserves, the inventories here in the U.S., but from a global perspective, we're still seeing what appears to be ample supply in the market. Looking at Baker Hughes rig count this week, we did get that released today as well, and we did see an increase actually in active oil rigs by 1, a decline of gas rigs by 2, so the net change was a decline of 1, but we did see oil rigs actually increase after declining pretty steadily here over the last month. So a little bit of a shifting dynamic there, but overall, when you look at general trends in the market, as we're seeing supply continuing to maintain, and demand, again, from a global perspective being called into question, it's creating some heavy selling pressure with WTI crude futures trading down to the lowest level in 3 weeks.